What are the priority areas, or where do you think government should focus on to have this impact on the lives of Nigerians? I'm being joined by the chief economist at Afri Invest West Africa, Mr. Robert Omotunde. He's live in the studio to start the year with us on Business Nigeria. Thank you so much. Happy New Year. It's good to see you.
Thank you very much for having me.
Well, it's an interesting one. For me, January-December circle seems commendable. President Tinubu made sure that was done by putting pen to paper yesterday. But for me, let's look at some notable things in this document. There's a difference of 1.2 trillion naira with what was presented in November. And also, the deficit is pegged at 9.18 trillion naira. Now, how do we finance this deficit? And what's your take on this document overall?
Okay, on the whole, I think that there are some signaling that the government is trying to put in place from the perspective of the aggregate budget as it relates to particularly recurrent expenditure and capital expenditure.
Yes.
You heard there when the minister said that there has been a reduction in the expenditure budget, whereas there has been an increase in the capital budget. Now, the capital budget, because you can forgive the current government, because the government came in May, took some time to stabilize, appoint the cabinet. If you look at the budget for 2023, there was a provision of, I think, about 6.5 trillion for capital expenditure. But out of that, only about 1.7 trillion had been expended as at 9 months. That is abysmal. Compared to recurrent expenditure that, even though there was a reduction in that as well, I think the government had planned to spend close to, I think, around 10 trillion or 12 trillion on recurrent expenditure. But, that figure also came down significantly. That's in 2023. But when you look at the plan of government now, vis-a-vis some of the comments that we've heard, I think the Honorable Minister for Finance had mentioned that there will be no approaching the central bank to fund the budget for 2024. I just hope that that will not be at the expense of the capital expenditure. Because, historically, what we see in the country is, the budget is rolled out there for recurrent expenditure, payment of salaries, the bills of government from a recurrent standpoint, funding the lifestyle of the political office holders and the rest. Those are the things that form the recurrent expenditure. And of course, the debt servicing costs, which is currently very major in the scheme of things when you look at the numbers that we are working with in Nigeria today. But most of the time, what gets to suffer is the capital expenditure, which is why you see a 2023 where the total spend, in the year has been close to 20 trillion in terms of actual budget performance. And if you go by the run rate, maybe we're able to hit about 22 trillion. Now, out of that, capital expenditure was barely 2 trillion, which means that till the year is over, we'll be lucky to get a 3 trillion expenditure in an over 20 trillion budget spent on capital expenditure. It doesn't just show that we are serious. So that's why I said that there is a signaling from the government to say that we are reducing recurrent expenditure, albeit marginal. I think recurrent expenditure from a budget-to-budget perspective has been reduced. There's something we do in this country that is a bad practice, and I think that we need to watch it. Most of the time, when the budget is being presented, the government presents budget comparison of previous budget with the new budget. I mean, budgeting in itself, it's a plan of spending, whether on recurrent or capital, as sources of revenue, where you think your revenues will come from. But the actual performance should give us a guide as to whether the past year is an indication or it's a basis for the projection of the new year. But oftentimes, that's not what we do. What we tend to do is to be comparing the budget of previous year, even though the budget may have not performed. Because if you look at the budget line items, it was non-oil revenue that came to our rescue. We had significant outperformance in terms of oil revenue budgeting for 2023. Oil revenue actually disappointed. There was a significant underperformance of oil revenue. Now, well, maybe not significant, let's just say
drop.
some drop in oil revenue performance. But when you look at a line item that is called independent revenue, sources, maybe surpluses from MDAs, that's ministries, departments, and agencies, that was a significant underperformance because there was a budgeting, I think, of about 3 trillion. And as a 9-month run rate, we were, just hovering around 1.1 or 1.2 trillion, which means that at the end of the year, we are not likely to have hit a 2 trillion. Now, we are now projecting, and that's where my concern is coming from for this budget. We are making a projection for an increase in, overall expenditure to 28 trillion.
Yeah.
And we are coming from approximately, let's just say, 23 trillion in 2023 from a budgeting point of view. In terms of actual performance, we actually underperformed because when you look at the run rate as at 9 months, I think the full year budget for expenditure, recurrent expenditure may be around approximately, let's just say, about 12 trillion, which means that what we are trying to do now is that we are projecting that we will almost double our revenue, and to see now that deficit has now reduced to 9.8 trillion from over 10 trillion,
10 trillion
in 2023. So for me, I'm just hoping that it's not a trap. And what gets to suffer, like I said, is capital expenditure. Some things are positive, I must say, from the non-oil revenue profile of government. It seems to be improving. Maybe we are doing better in terms of our collection. You may give that to the new president, who has been seen to have driven, what Lagos State seems to be today in terms of non-oil revenue. So maybe some of those efforts are being implemented, and this will continue to improve. But to see that we will have that quantum jump, because it's going to be a jump in revenue for us to be able to achieve that deficit, that lower deficit of 9.18. It's going to be a while. Let me speak a bit to debt servicing. Sometimes,
yes, please, very important.
Sometimes it's very, it's not tidy. Oftentimes, for instance, look at the budget of 2023. Relative to actual performance, you will see that we even miss our own projection for debt servicing. And sometimes I wonder, when we talk, debt servicing cost is the cost of servicing the debt that the government has taken. Some of them commercial, in fact, most of them commercial. Commercial in the Eurobonds market, commercial in the local bonds market. No. Is it that we don't know the total debt outstanding that we have, or is it that, we are not able to effectively manage what our debt servicing cost should be from a local point of view? Because I suspect where the government is getting this wrong is from the local debt servicing cost, which seem to be increasing intermittently in 2023. And the government has control over this. The government can argue that every time they approach the market through the debt management office, they are coming to the market and they are, listening to the dictates of the market. But in the real sense of it, the largest supplier in that market is the federal government. True. And I would think that from a prudence point of view, the government will be able to manage the cost effectively. Because what the market is only doing is trying to read what the debt management office will do at every auction. So when they are even projecting that they want interest rate at 20%, if the DMO says, I'm not going above 9%, the next auction, the market will readjust. So I just feel that, there's a part of that we need to watch. Because if we cannot get our own projections right, there was over 900, almost 900 billion overage in terms of our debt servicing projection. That is, we surpassed our debt servicing projection by 900 billion only in 9 months. You can imagine what would have happened in the full year. So, those are some of the areas we need to watch. And then to now know that our debt servicing cost to revenue, it's abysmal. Perhaps that is one of the reasons why the government is trying to increase its revenue drive. However, I think that the government is a bit aggressive. And if I'm going to go by the statement of the Honorable Minister that says that they won't turn to the central bank to fund the budget, it then means that there are two ways. It's either we are not able to meet the budget as projected, in which case capital expenditure is what suffers, or the government will have no choice, or, okay, there's another option to increase our level of borrowing, but what's the capacity of the local market to absorb? In 2023, for example, the total issuance in terms of, borrowing from the local market was roughly around 7 trillion naira, and that's below the deficit because the government could not approach the external market last year. So this year, if you combine both external market and the local market, perhaps we are able to raise close to on the average 13 to 14 trillion, So that means that for a 28 trillion budget, we need to then be able to record a revenue profile that is significant enough so that we are not turning to the central bank. Those are the issues that to lay bare. But I must say that it is commendable that the government is making definite effort to reduce expenditure and recurrent expenditure and increase the capital expenditure profile of
let's take it up from there. And the assumptions too are something that we need to touch on. This is very, very important. Projection of 1.7 million barrels per day. I think as of today, we are still about hovering between 1.2, 1.1, 1.3, and all of that. And also price per barrel. I think the price of crude is fairly well now in the market. Is looking pretty well. So what do you think about all of this and expected revenue from this? Some are also talking about the ways and means which the Senate President has come to say this has also been securitized.
So I think that in terms of the assumptions, I would say that they are fair. Now, 1.7 trillion per day production.
Per day production.
It's possible. The major issue that we've had, don't forget, we've been there severally. We've been over 1.7 trillion. We've been above 2 million barrels per day.
About 2 million.
But the issues we've faced recently has been the issue of theft, outright theft of crude oil, which, again, speaks to a fault in our security architecture.
A real fault?
Yes. So if the government is projecting 1.72 trillion, sorry, 1.72, I think in terms of money for
million barrels per day.
If they are projecting 1.72 million barrels per day, it then means that I want to believe that the government is putting efforts in place to ensure that our pipelines are secured, to ensure that we are able to, from whatever we get from the ground, we are able to get it to the market in order to earn revenue from there. So I think on that one, we will give it to the government. It's only when we now begin to review, maybe after the end of first quarter, and we are not seeing that traction, that we begin to get worried. Because we know that the country has the capacity to even produce about 1.72 trillion, 1.78 trillion barrels per day. So it's very achievable. Government just needs to be serious and manage the security, architecture to ensure that we achieve that in earnest. On the other hand, in terms of projection for oil prices, it's actually very stable as well. I think government
with the global issues.
Yes, government is projecting about $78 per barrel.
78. Yes,
and $78 per barrel of of price. We will say that is a bit. I say it's conservative.
Okay.
Now, conservative in the sense that we saw the episode of 2023. Culminating from what happened in 2022 from the Russia-Ukraine war, and and the effect of the recent issues that came up, with OPEC and its allies.
Yeah.
Those were the things that supported oil prices to the high level of above, $90 and $100 per barrel. But now we are seeing some sort of stability, and barring any other shock, within the macroeconomic space, we will enjoy that stability for some time. So a projection of $78 per barrel, we think is conservative. The only thing that gets to suffer from a domestic point of view is the excess crude account, if that account is still functional. Because, it's the excess between, the actual oil prices and the budget that is saved in the excess crude account. So, because I do not see a possibility of having consistently above $80 per barrel oil in 2024. But in terms of meeting that actual, I believe that we are good to go. If we can ensure that our production is steady, and if we can even achieve much more, it's better. There are two ways to accrue the excess crude account. It's either from a price point or from an output point. So if the budget has already projected 1.72 trillion, in terms of budget for 2024. So if we increase that, if we're able to surpass that, that could go into the excess crude account. Exchange rate is where the major issue is. I don't know why.
The big one.
Yeah, it's big.
I saw a Bloomberg report saying that the Naira's performance this year might not be too good. I read that report and I'm not too happy.
You can see the handwriting on the wall. The new central bank came in and, with high hopes. There was a time that we had a crash from 1,300 naira in the parallel market to about 1,900. But after a while, because there is no consistent supply, we began to see, further pressure. as we speak, in the parallel market is 1,200. And I thought that the central bank wanted to, sort of harmonize the market to have a unified exchange rate.
Yeah.
Which means that you would expect that the NAFEM window, which is now so-called, that has replaced the investors and exporters window, the I&E window, you would expect that that window is now market reflective. But what do we see? Today, you're talking about 1,200 in the parallel market, and NAFEM market is still below 1,000. And these are ways that can even help the budget projection of government. I would have said that the revenue projection of government, maybe some of it will be coming from exchange rate gains. But when I see the budget benchmark at 750, I begin to worry.
How
do we marry this?
Yeah,
because again, for us to achieve 750 naira exchange rate at this point, there has to be significant supply in the official window, which is what is not happening at the moment. We won't say that we are sufficiently supplied. And oil prices, or stability of our oil production, if it gives us more revenue in terms of accretion to the reserve, the central bank has more capacity to be able to defend the currency. But as we speak, we need to be a bit realistic. I would have expected an exchange rate projection for the budget that is above 1,000 or even 1,000. That is a conservative level, because between you and I'm not sure that we can get to this 750 in the near term, except the government has a plan that has not told the market. But from what we have heard them say consistently, and the reality on ground, it doesn't seem like a 750 naira exchange rate is achievable in 2024. So the government may need to come out and tell us more, what we don't know, that they know. But from what we see, it doesn't look achievable. And if we can get that sorted, that has implication on the investment landscape as well. Because right now, we are not even attracting foreign portfolio investment, let alone foreign direct investment. So it means that if we really want to be serious in 2024, I keep saying it, we have to embrace the market for our exchange rate at the minimum. Sometimes I wonder why it's so difficult to do. This is something that we have done consistently before the last 9 years of the last central bank. And we are very hopeful that the new central bank administration will get us back to that level that we used to be, where we were not the laughingstock of any economists or any investors that are serious. Because when you come to the country and you look at some of the, apart from insecurity, let's even keep that by the side, from market principles, things that should work normally in terms of how prices are allocated within a working economy, we are not seeing that happen. Happening. It's not happening in our exchange rate, which is the entry point to which foreign investors will come into our economy. So if there is any advice I will give to the central bank, that exchange rate, we need to look at it. The central bank is, putting a lot on itself. We know that where the country is now, there are no easy fixes to our problems, right? So there is no point pretending to be okay when we are not. Because for me, if exchange rate is being managed to stay below 1,000 at the official window, we are only trying to manage ourselves, and not coming out truthfully. The truth is that where our exchange rate should be now is above 1,000. Let's call a spade and save the reserve so that when the central bank is coming out to defend the currency, they spend less defending than what it is right now, because they must stick to the official window in intervening in the market.
Honestly, I must thank you so much. I know we can spend 1 hour on these issues, and we'll keep having 1 or 2 developments. Chief Economist, AfriInvest West Africa, Mr. Robert Omotude, thank you so much for starting the show with us this year. We appreciate it. Very much. I wish you a profitable year.
Thank you very much.
All right, there. Well, coming up on the show, we look at prospects for Nigeria, United Arab Emirates,